Welcome to the next episode of the Hungry Realtor Podcast. In this episode, I'll be discussing investing in real estate and providing tips and strategies for getting started. Real estate investing can be a great way to build wealth and generate passive income, but it's important to understand the ins and outs of the industry before jumping in. Before we dive into the topic, I'd like to ask our listeners to please like, subscribe, and share this podcast with your friends and family. Also, don't forget to follow at Hungry Realtor on all the social media and YouTube for more valuable content. Let's get started. Before investing in real estate, it's important to have a solid understanding of the market. This includes researching the local market conditions, such as supply and demand, vacancy rates, and property values. Understanding the market can help you identify the right properties to invest and make informed decisions about the strategies that you want to implement. There are several investment strategies to consider when investing in real estate. I'm going to cover four. The first one is buy and hold. This strategy involves buying a property and holding on to it for an extended period of time, typically with the intention of renting it out to generate passive income. The second strategy is called fix and flip. This strategy involves purchasing a property, making renovations and improvements, and then selling it quickly for a profit. The third is referenced as the BRRRR strategy, or BRRRR. This stands for buy, rehab, rent, refinance, and repeat. This strategy involves purchasing a distressed property, rehabbing it, renting it out, refinancing to pull out any equity, and then using that equity to purchase another property. The last strategy I'll cover today is wholesaling. This strategy involves finding a distressed property, getting it under contract, and then assigning the contract to another buyer for an assignment fee. Each strategy has its own benefits and drawbacks, so it's important to understand the goals and risks associated with each one. Look for future podcasts where we will do an entire episode on each one of these investment strategies. When it comes to financing your real estate investment, there are several options available. The most common options include traditional mortgages. This is the most common type of financing used for real estate investments. It involves getting a loan from a bank or other lender and making regular payments over a set period of time. To qualify for a mortgage, you typically need a good credit score, a solid income, and a down payment of at least 20%. Then there are hard money loans. These are short-term, high-interest loans that are typically used for fix and flip projects. Hard money lenders are private individuals or companies that lend money based on the value of the property rather than the borrower's credit score or income. These loans are typically more expensive than traditional mortgages, but they can be easy to qualify for. Then there is a private financing. These involve getting financing from a private individual or company rather than a bank or traditional lender. Private financing can be a good option if you have a unique investment opportunity or if you don't qualify for traditional financing. When choosing a financing option, it's important to consider the terms and conditions, including interest rates, fees, and repayment terms. It's also important to have a solid understanding of the potential returns on your investment to ensure that the financing is a good fit for your investment goals. Next, you will have to build your real estate team. Building a real estate team can be essential to a successful real estate investment. This team may include a real estate agent, like myself, a contractor, a property manager, an attorney, or an accountant. Having a team in place can help you make informed decisions and maximize your investment. If you're investing in rental properties, it's important to have a solid property management plan in place. This includes screening tenants, handling repairs, and managing rent payments. Having a strong property management plan can help you maximize your investment and avoid potential pitfalls. Then, speaking of pitfalls, risk management is a big deal. Investing in real estate always comes with some level of risk. It's important to have a solid risk management plan in place to mitigate potential losses. This can include having adequate insurance coverage and setting aside funds for unexpected repairs or expenses. Well, that wraps up our discussion on investing in real estate and providing tips and strategies for getting started. Remember, real estate investing can be a great way to build wealth and generate passive income, but it's important to understand the market, identify investment strategies, and have a solid team and risk management plan in place. If you have any questions or comments, feel free to reach out to me on social media or my YouTube channel at Hungry Realtor. And don't forget to like, subscribe, and share this podcast with your friends and family for more valuable content. Thank you for tuning in to the Hungry Realtor Podcast, and I look forward to sharing more real estate information with you.